Welcome, and thank you for joining the OIG as we discuss elevating the quality and compliance of LSC grantee financial statement audits. Again, my name is Stephanie Laughlin, and I'm joined today by our presenters, Audit Director Portia Brower, Senior Auditor Andrew Hensel, and Audit Managers Carol Bates and Meliza Ella. With that, I'll turn it to Portia to get us started.
Thank you, Stephanie. Again, good afternoon, everyone. Thank you for joining us today. If you joined us last year or even the year before, you may be familiar with some of our content where we focused on the results of our latest quality control review cycle, introduced updates to our OIG audit guide and compliance supplement, and provided insights on both our desk review and quality control review processes. This year's presentation will be similar to those in years past, with a few reminders we believe most of you will find helpful as it pertains to the major components of improving grantee audits. To start, we will revisit the OIG's quality control review process, or as you know, QCRs, which will include findings and recommendations issued during our most recent review of select LSC grantee financial statement audits. We will also briefly discuss the importance of timely submission of audited financial statements, including why they're required and why it matters. We will then shift to sharing a few compliance requirements surrounding grant fund transfers. And to round us out for the afternoon, we will highlight key reminders for auditors related to the LSC OIG Audit Guide. We'll close out by sharing a few resources for IPAs of LSC grantees before opening the floor for any questions. Next slide, please. So, why do we think any of this is important to those of you attending today? We think that performing QCRs and improving grantee audits is essential for three main reasons. One, proper audits help to ensure compliance with audit standards, as well as provide confirmation that grantees followed the specific standards and requirements set by the Legal Services Corporation. Two, high-quality audits also help with strengthening accountability and transparency while maintaining trust and integrity in the use of grant funds. Three, this presentation matters because compliance with and meeting federal requirements that are tied to grant funding helps to ensure that grantees adhere to legal and regulatory obligations. Otherwise, it compromises grantees' ability to obtain funding and to provide the services to those who need it. Audit quality is not just a technical requirement, as we know. It's critical for legal compliance, financial integrity, and organizational accountability. Now, let's take a closer look at what we hope you will learn today. Next slide. So, ideally, we'd like attendees to walk away from today's presentation with three key things top of mind. One, actionable insights taken from key findings of actual quality control reviews to help avoid common audit pitfalls specific to LSC grantee audits. Two, practical strategies to improve audit quality and accuracy to strengthen audit processes. And three, we want to share reminders and updates on policy and compliance to ensure auditors and grantees are not only compliant, but are aligned with current requirements. Next slide. So let's move on to sharing a little bit about the LSC OIG Audit Division and walking through our QCR process. The OIG Audit Division ensures compliance and accountability through multiple audit-related activities. Some of those include, but of course aren't limited to, performing audits of LSC grantees to verify adherence to standards. We conduct desk reviews of all LSC grantee audited financial statements in single audits for accuracy and compliance. We also help perform in-depth reviews of select audit reports and work papers to assess quality. And we provide resources, advisories, and updates through the audit guide, our compliance supplement, and other direct communications. Next slide, please. Our QCRs involve an in-depth review of financial statement audits and work papers to ensure compliance with applicable standards and LSC and LSC OIG guidelines. To offer just a bit of insight into our selection process, we aim to review each grantee and their IPA at least once every 4 to 5 years. The timing of the selections are largely based on the grantees. So if an IPA happens to audit multiple LSC recipients, that IPA may actually have more frequent QCRs than others. So we're not picking on you. Selection is risk-based, and we consider factors such as the length of time since the last review of the IPA and the grantee, the results of previous QCRs, as well as the results of prior audited financial statements. Next slide, please. So following our risk-based selection process, the OIG officially initiates the review by issuing notification letters to the IPAs and the grantees. Our contractor, McBride Block and Associates, then reaches out to schedule the QCR visit, which might occur on site or in person, or may even be conducted remotely. One thing we'd like to note here is that there may be a lag in timing between the notification letter you receive from the OIG and the time that the contractor has the opportunity to reach out to schedule the actual visit. This is largely due to how we coordinate the scheduling, any related travel, and other planning logistics that occur behind the scenes. Once on site, the contractor reviews audit work papers, discusses questions concerning the review, and even holds an exit conference to discuss the results. The contract will then prepare a QCR report, and they send that report to the OIG for review. Once we've had the opportunity to review the report, maybe discuss some items with the contractor, we then transmit that report to the IPA and the grantee. We provide recommendations if they're warranted, and we request corrective actions before closing the QCR. In those instances where corrective action is needed, we evaluate the IPA's response, including any documentation that's provided, and we issue a formal and usually final notice of the results. LSC's Office of Compliance and Enforcement is copied on these communications, so we keep the lines of communication open. In very rare instances, if it is determined that an audit has not been performed in accordance with standards, or if corrective action does not result in satisfactorily addressing the QCR issues or the recommendations, the OIG has the authority to debar, suspend, or remove IPAs or IPA firms from performing audited services for LSC recipients. This is in accordance with Part 1641 of the LSC regulations, and is with really just the intent of making sure grantees receive acceptable audits. So now that we've given you a sense of how the quality control review process works, let's dig into the results of the latest rounds of QCRs performed for fiscal years 2023 and 2024. Andrew, I will pass the floor to you.
Thank you, Portia. So as you can see in this slide, we performed 34 QCRs of fiscal year 2023 and 2024 audited financial statements in our last QCR cycle. This chart shows the breakdown of the results of those QCRs. 21% of the reviewed audits met standards with no exceptions. That's what we're aiming for. That's the gold standard. 53% met standards, but had exceptions that led to recommendations for future audits. And then 26% met standards, but they required corrective action from the IPA. Our goal with these following slides is to reduce the reviews that require follow-up to save you time and resources, and also to better have audit coverage of the LSC grantees. Next slide, please. So we'll start with some general observations, and if you've been in previous presentations, you've probably heard this one before, but we can't stress this enough. A recurring theme across our QCRs was insufficient documentation. So we ask IPAs to always document how the compliance supplement steps were performed. If an IPA omits a suggested procedure because they feel that it's not direct or material, then they should document that judgment and the rationale for that judgment in the audit work papers. In short, gaps in documentation limit the ability for us to confirm if procedures were completed appropriately. Next slide. So to address documentation and planning gaps, we have 3 general recommendations. The first is to research and thoroughly understand the LSC program and all LSC requirements during audit planning. Reviewing the LSC OIG audit guide as well as the LSC financial guide are 2 key steps for this. Next, evaluate. Completely perform the suggested audit procedures found in the compliance supplement to the LSC OIG audit guide. And then finally, document. Fully document your assurance that you have met and addressed each element of the compliance supplement. Next slide, please. So to get more specific, these are the top 3 most common QCR issues that we found in the most recent cycle of QCRs. You can also find more information about this on our website on our most recent QCR advisory, which we publish yearly and we also send out. So the top 3 most common issues were review of matters, which were in 50% of all audited financial statements we reviewed, timekeeping, and then carryover funds. And we'll go over each of these with observations and recommendations. Next slide. Review of matters. So the first thing to understand is LSC's definition of matters, which is activities supporting program services that do not involve legal advice or representation. This includes things like outreach, education events, workshops, and other related events. Some IPAs tried to review matters through case file testing. However, that approach would not meet audit standards because case file testing is focused on legal representation and does not adequately evaluate non-legal program activities. Next slide. So we recommend that auditors familiarize themselves with LSC's definition of matters and also to understand how grantees track and monitor these activities. One good step is to review the grantee's required LSC report of other services to assess alignment with program goals and then document the results of that review. Also, because we've had many questions about this review, we have recently issued an audit advisory entitled Elevating Your Audit, How to Improve Your Review of Matters, and it goes into much more detail on what an appropriate review of matters would look like. You can click the link when you receive the slide deck, and you can also find this link on our website. Moving on now to timekeeping on the next slide. Timekeeping issues appeared in about 1 out of every 4 QCRs. Common issues included auditors reviewing too few timesheets and failures to obtain required certifications for part-time employees. These deficiencies weaken the audit evidence supporting personnel charges to LSC grants. Next slide. So our recommendations for timekeeping are that auditors should ensure sample sizes are adequate to support their conclusions. The compliance supplement suggests a minimum sample of 20 timesheets. IPA should also verify all relevant employee certifications and confirm that the grantee's timekeeping system meets LSC requirements found in the LSC financial guide and LSC regulations. Remember to document the testing performed and the basis for your conclusions over compliance. Next slide. And then finally, some observations on carryover funds. Carryover rules are found in the LSC Financial Guide as well as Program Letter 23-2. When a grantee's unspent LSC fund balance exceeds 10% of its LSC support, a waiver from LSC is required. Miscalculations can affect compliance and funding. Next slide. So our recommendations to avoid issues is for IPAs to recalculate the prior year fund balance, confirm that the grantee has controls in place to identify when waivers are needed, and if a waiver was previously granted, verify that related expenditures complied with the waiver and were accounted for separately in the grantee's accounting system. As with other areas, clearly document all procedures and findings. That concludes the summary of common QCR findings and recommendations. I'll now hand it off to Carol, who will discuss the timely submission of audited financial statements and why meeting deadlines is essential for compliance and risk mitigation.
Thank you, Andrew, and hello, everyone. As Andrew said, I'll be speaking first about audited financial statements and submitting them on time, and then about grant fund transfers. Next slide. Why do timely submissions matter? It matters because it's an important part of grantee management, LSC oversight, and OIG oversight. These reports provide critical financial and compliance information, and with timely audits, findings can be corrected as soon as possible. So to remind everyone about the submission requirement, on August 27th, 2024, our Inspector General issued an advisory about submitting audited financial statements on time. This advisory was issued to reduce the growing number of requests for extension, and this advisory is on our website. Next slide. So audited financial statements requirement is that they are due within 120 days of fiscal year end. Information on extensions is on our website. I'd like to highlight that the OIG may grant extensions for good cause, such as unforeseen circumstances, but granting extensions are not always automatic. Poor planning or preparation are not considered good causes. Next slide. The law that requires audited financial statements be submitted to OIG also includes consequences for unapproved late submissions or deficient audits. The law allows LSC to recommend, the law allows OIG to recommend that LSC impose sanctions. Those sanctions include withholding a percentage of LSC grant funding or suspending LSC funding. And this link includes, this slide includes a link to our advisory, so you can read the full advisory. Next slide. Moving on to grant transfers. During our desk reviews, we are finding inappropriate grant transfers that are prohibited by LSC. And as LSC Financial Guide states, LSC grant funds must be accounted for by grant and used for their intended purpose. Next slide. Just as a reminder, LSC requires that LSC funds are segregated from other revenue sources and that grantees maintain separate reporting for each grant and report that in the audited financial statements. A sample of how this LSC grant should be reported are contained in the Financial Guide Appendix 4. Grantees are required to report LSC funds and related activities as a separate column in the supplemental schedules, and each separate LSC grant must be reported by natural expense classification. Thank you for your attention, and I'll turn the presentation over to Melissa, who will finish us up.
Thank you, Carol, and hello, everyone. So now we'll be discussing a few important updates and reminders. Next slide. So I'll start with a clarification from the June 2025 update to the audit guide. This update corrected an error in section 2-1B of the audit guide. The prior language incorrectly referenced a management representation letter instead of a management letter. The corrected language clarifies that management letters should be included with the audited financial statement report submissions to the OIG. So again, remember to include the IPA management letter with the audited financial statement report submissions. Next slide. The next item is a reminder of an existing requirement. Section 509E of the 96 LSC Act requires an IPA to notify the OIG within 5 business days when it terminates or otherwise ceases audit services for a grantee. A sample notification is provided in Appendix E of the audit guide and may be submitted by email to audits@oig.lsc.gov. We also ask to notify the OIG when a new IPA is engaged and to provide the new IPA contact information. So remember to notify the OIG within 5 business days of an IPA change, cessation of audit services, and share new IPA contact information. Next slide, please. And lastly, I'll address the delay in the release of the OMB compliance supplement. The OMB released the 2025 compliance supplement on November 26, 2025. It is effective for audits of fiscal years beginning after June 30th, 2024, and this supersedes the 2024 supplement. This delay affected LSC grantees with June 30th and July 31st, 2025 fiscal year ends. As a result, the OIG provided an automatic extension for submitting the audited financial statements. The new deadline is January 26, 2026. No extension request is required. So affected grantees automatically have until January 26 to submit the audited financial statements. Next slide, please. So before we wrap up, I want to note that we've included this slide here with additional resources and reference links related to today's presentation. I won't walk through each link individually, but a copy of the slide deck has been shared in the chat. Next slide. Again, thank you for your time, everyone, and your attention. We'll end the recording here and open the floor for questions.